Canadian investors looking to build wealth through dividend stocks have a lot of options to consider. The Toronto Stock Exchange or TSX features a diverse range of dividend-paying companies across a variety of sectors. Here are some steps you can take to research the best Canadian dividend stocks on the TSX and learn which sectors are bullish right now. Step 1. Identify top dividend-paying companies. Start by compiling a list of top dividend-paying companies on the TSX. Look for companies that have a history of paying regular dividends, offer strong yields, and have a solid financial performance. Some great examples of companies with a strong dividend record include banks such as Royal Bank of Canada, utilities companies like Fortis and telecoms like BCE. Royal Bank of Canada, commonly known as RBC, is one of the largest banks in Canada and has a strong presence in the international banking sector. RBC offers a wide range of financial services, including personal and commercial banking, wealth management, and investment banking. RBC has consistently delivered strong performance. For example, in the second quarter of 2022, RBC reported net income of $4.3 billion, an increase of $238 million or 6% from the previous year. Additionally, diluted earnings per share grew by 7% during the same period. However, in the first quarter of 2023, RBC reported net income of $3.2 billion, a decrease of $881 million or 22% from the previous year. Nevertheless, indicators suggest stronger performances are still yet to come as RBC remains a pillar of the Canadian financial sector. Regarding a strong player in the Canadian utilities, Fortis is a leading North American electric and gas company. With operations in Canada, the United States, and the Caribbean, Fortis serves over 3 million customers. The company's mission is to provide safe, reliable, and affordable energy to its customers' base. The company's key 2022 financial highlights include total revenue of $8.1 billion, representing a 5% increase compared to the previous year. Its net income of $1.2 billion showed a growth of 8% from the previous year as well. Earnings per share of $2.53 demonstrated a 10% increase, while operating cash flow of $2.5 billion reflected a 7% growth compared to 2021. The company's dividend payout ratio was 69%, indicating a commitment to providing returns to shareholders. Fortis invested $4.1 billion in capital projects, focusing on enhancing the efficiency and sustainability of its operations. Furthermore, continuous investments in infrastructure and sustainable energy projects position it well for future growth and success. Last but not least, the biggest Canadian telecom out there is BCE. The company offers a wide range of services, including wireless, internet, TV, and home phone, to residential and business customers. BCE reported, for the first quarter of 2022, operating revenues that grew by 2.5% compared to the same period in the previous year, reflecting a recovery from the adverse effects of the COVID-19 pandemic. The increase in operating revenues was primarily driven by higher service revenues, which grew by 4.2% year-over-year. This growth was mainly attributed to strong performance in wireless and internet services. BCE achieved all of its financial guidance targets for 2022, indicating successful execution of its business strategies, which bodes well for 2023. Step 2. Assess the company's financials. Once you have your list of top dividend-paying companies, it's time to assess their financials. Check the company's financial statements, including its income statement, balance sheet, and cash flow statement to ensure they are financially stable. Look at metrics like earnings per share, debt-to-equity ratio, and return on equity to help determine which stocks are worth considering. Step 3. Research the industry and sector. Next, review the industry and sector the company operates in. You can look for sectors or industries that are very stable and bringing a steady stream of income like the aforementioned banks and utilities, or go for those offering more signs of growth opportunities. As of 2023, the industries and sectors with high potential growth on the TSX include technology, renewable energy, and materials. Companies that invest in these areas may provide stronger growth prospects if you're in for the long run. Step 4. Consider the company's dividend yield. Another important stock metric to analyze is the dividend yield, which is the annual dividend payment divided by the stock's price. It's important to compare the company's dividend yield to historical yields and industry averages to evaluate whether it's a good time to buy the stocks. Step 5. Monitor your portfolio. Finally, once you invest in dividend-paying stocks, it's important to monitor the company and the industry over time. Keep yourself informed on regulatory or industry changes that could impact your investment. A good way to build your wealth is a tool called Dividend Reinvestment Plans or DRIP. Most companies offer that feature, which could help achieve that goal. As a matter of fact, reinvesting your dividend payments can help to grow your holdings and increase your return on investment. Conclusion. In conclusion, researching Canadian dividend stocks on the TSX is an excellent way to build your investment portfolio and generate passive income. Following the aforementioned steps can help you identify top dividend-paying companies and give you insights into bullish sectors on the TSX. Investing time and effort to research and track your investments is crucial to maximizing your returns and building wealth over time.